Hey guys, so in this video, I'm going to be talking about the best practices for Forex traders. So what this simply means is, what are the top 6 things that you should always do as a profitable Forex, well, at least if you want to become a profitable trader. So I'm going to be, dropping 6 bullet points, things that you should always do whilst trading Forex. So guys, if you want to find out more about this, I suggest you stick around to the very end of this video. Now guys, let's go over to the video. Hey guys, and welcome back to my YouTube channel. My name is Dapo Willis. Once again, it's amazing to have you guys back here as always. Now guys, like I was saying earlier, today I want to talk about the 6 best practices when it comes to trading Forex. So I've made a list because I was doing a little thinking. I was thinking to myself, okay, so what are the, I always like to come on here and give you guys tips, okay? I try to help you guys as much as possible. So I was thinking, what are the top 6 or top 5 things that could actually help my viewers, you guys that watch my content? What are the top 5 to 6 things that I feel could really help you guys, so that every time it is you're getting into a trade, or every time you're reviewing the market or you're doing your analysis, it will kind of like guide you, just be in your mind. So, and you always know guys, I always like to drop this in a step-by-step format in bullet points. So guys, let us see what's cracking today. Now, before I get into the nitty-gritties of this video, I need you guys to do me one little favor. Smash that subscribe button right there and drop this video a like, and don't forget to comment on this video. This is exactly how the videos get exposure, and we can obviously help more Forex traders. You have to understand that I am on a mission. I am on a mission to help 1 million Forex traders. Yes, the reason is because a lot of Forex traders are just suffering. They're sick, tired, and they're stressed out. They're absolutely suffering, and we need to change that. More people need to be able to make money from the Forex market and not just the broker. So guys, let's jump into the nitty-gritties of this video. All right guys, so the number 1 thing when it comes to best practices as a Forex trader, number 1 thing that I encourage you guys to always do is to, first of all, it's quite simple and basic, but a lot of people just don't know how to go about it. The very first thing is you want to define the market structure. For me, this is paramount. This is the very first thing I do, and I usually always do this on a monthly time frame. So what exactly is market structure? What direction is this market heading in? Are we going up? Are we going down? Or are we simply going sideways? Now, once I'm able to determine what the hell this market is doing in the first place on a monthly time frame or a weekly time frame, then I'll give you an example. Let's say, as at the time I'm shooting this video, let me look at a pair and see what direction a pair is moving in at the moment. So from what I can see at the moment, AUD USD seems to be very bearish, especially on a monthly time frame. So I will simply go on the monthly time frame and identify the direction, the flow of the river. What direction is this market heading to in the first place on a higher time frame? Okay, first things first, I want to know what exactly is this market doing, what on a higher time frame. So once I can identify what the market is doing on a higher time frame, only then I will then, imprint this in my brain. Only then will I scale down to a lower time frame and trade in that direction. So market structures are very important. Like, if you scroll down my YouTube channel, you'll notice the very first thing I always ask myself is, what the hell is this market doing in the first place? All I'm asking myself there is, what is the market structure? This will then guide your trading decision on lower time frames. Okay, this will then guide your trading decisions on lower time frames, because once I can identify if this market is moving south, once I scale down to lower time frame, my brain, my whole mind is just looking for sell opportunities. This way, if I see buy opportunities on lower time frames, but the higher time frame has told me sell, I would know that, okay, this buy opportunity will either be a losing trade or very temporary. Okay, so this is the hack. Okay, higher time frame, direction of the market, what is the structure? And if the higher time frame is moving sideways, then I know that on lower time frames I shouldn't really be expecting big moves, because if the higher time frame is ranging, for instance, the market isn't going to be trending, 500, 600. It's just going to be going in a big range, right? So I will know that, okay, if I get in, I shouldn't be expecting to make anything more than 80 to 100 pips. So understanding market structure is actually very key, and it should be the very first thing you should even think about whenever it is you open a Forex chart. Alright guys, so the second best practice you guys should always do whenever it is you're analyzing and trading the Forex market is, once you've been able to identify the structure of the market, the second thing you should always do is try and identify areas of value. Now, I analyze my areas of value on weekly time frames. That's where you see me, and this is where you see me come and plot my key levels. So areas of value are nothing more than areas whereby the market has respected a lot in the past. Now, why should we always trade from areas of value? It's because the market has told us historically that that level has, been quite difficult to break in the past. And chances are that in the future, it's also going to give us some headache. I'll take that again. The market has told us that this level is a significant level because it has reversed from this level previously. So how do you use areas of value to make profitable trading? So how do we use areas of value to make profitable trading decisions? It's very simple. Personally, what I like to use my area of value for two things. So once I plot my levels, my key levels on weekly time frames, I use it to, first of all, identify profit targets. Because a lot of people might buy or sell, and just because of the fact that they cannot identify the key areas of value, they can be holding a profitable trade, and then the market gets to that area of value, and then the market reverses, and they go from having a winning trade to a losing trade. And one thing about traders is, if the market probably gives you 350 pips and then the market starts reversing against you, most traders feel that, okay, I've made 350 pips, this market must give me back my 350 pips. And then what happens is they end up holding that trade longer than they should. Happens to the best traders. It used to happen to me in the past. So area of value will save you from holding on to trades longer than you should hold on to them for. And the second way you can use areas of value, I like to use areas of value, is when I scale down to lower time frames and I want to enter a trade. I don't enter a trade at key levels, areas of value. I don't trade at those areas of values. I like to look for bounces. So let me put everything together in a clear perspective. I've been able to identify the market structure on a monthly time frame, and then I scale down to a weekly time frame. And then I need to plot my key levels, my areas of value. So what I can do is, for instance, AUD/USD is bearish at the moment on a higher time frame. I'm going to wait for the market to bounce off of a resistance level. I'm not going to be selling at the resistance level. I'm going to be trading the bounce off the level. Why? Because one thing about areas of value is, especially on lower time frames, don't forget we analyze on higher. Forex Mastery students, you know this. We don't trade at key levels. We trade the bounce of key levels because, guys, one thing about areas of value is the fact that, especially on lower time frames, it is subject to a lot of market manipulation, okay? Brokers, I wouldn't say brokers, let's call them the people who move the market, okay? I don't want to castigate brokers. So the people who move the market, they know that a lot of retail traders have orders at key levels. They know a lot of them want to sell if it's at the resistance, or they want to buy at support. So what they usually do is they go and fake out the level. So I like the market to go and fake out all the, I call them dumb money traders. I consider myself a smart money trader, and I consider all my students on the Forex Mastery course, I consider us smart money traders. So guys, on module 5, I speak about market manipulation. This is very important module, because I remember back in the days I used to get victim for this. I'll put my sell limit at key levels and expect that the market will get there and bounce off and then come down and make me all this profit. However, what used to happen was the market would get there, fake out the level, take my stop loss out, and then start falling back down. So how you should use your key levels is wait for the bounce. Always wait for the bounce off of these areas of value. So that's the second point. Use areas of value to your advantage. First thing I use area of value for is to enter my trade. I wait for the bounce, reject it, go and run all the stops and then reject it, send it back down like, aha, now you're ready to go. Number one. Number two, I use areas of value to what? Set my profit target. So guys, obviously I'm going through these points bit by bit. I don't have my charts to explain all this, but on the Forex Mastery course, I actually go into this in detail, okay? Detail as to how you can plot these areas of value, how you can use the bounties, and how you can, plot the levels and actually anticipate profit targets up to 1,000 to 2,000 pips. Is madness. You think I'm joking? Scroll down my YouTube channel, you see me. I'm projecting thousands of pips. Speak to the students. They love this. This is the first time they've been able to project, and some traders have never been able to project 500 pips into the future. This is the first time traders are actually coming in and actually seeing that, listen, I can actually project thousands of pips into the future. But I'm not going to dwell on that too much. Let's go over to the next point. All right, guys. So the third point when it comes to market best practices out of our top 6 is being able to identify reversals. So this is so key because point number 1, we covered market structure. Okay, you have to know where the market is going. Point number 2, areas of value, take profit and entries, and kind of like how to get into the market. Point number 3, you need to be able to identify reversals. Now, a lot of people struggle when it comes to identifying reversals because I've seen a lot of situations whereby people are in trades and then, there's probably like a lot of pips in profit, and then for some strange reason, the market just turns around. Now, the question is, how do you really identify reversals? Now, so there's a module on the Forex Mastery course where I speak about, it's dedicated to reversals, but I'm going to give you guys kind of like the ideology, the idea behind how you can identify reversals in the market. Now, for those of you who want to grab the course, the link is going to be down in the description as always. Now, for me, how I identify my reversals, and for me it's very important, is I always like to look, so reversals on higher time frames, for instance, the weekly. If I see a double top on the weekly time frame, I know that this whole bigger trend is about to change. Now, on lower time frames, how do you identify reversals? I identify reversals on lower time frames. I'll give you an example. Let's say I'm in a sell trade on GBP USD on a 1 hour time frame, and the market is collapsing, coming down, and then I notice that the market comes into not a major level of support, but I can see that there's that level, it's kind of like a support level, but it's a minor support level, right? And I see the market coming to that level. Ideally, I'm expecting that the market should break the level because the momentum is massive. We have an overall 1,000 pip to run. Let's say we've done our analysis and we have 1,000 pips to look into. We've done our analysis. We're heading for 1,000. We're heading for the home run. But then I noticed that as the market is selling off on a lower time frame, I noticed that obviously on lower time frames you can see minor support levels, right? And then I noticed that on a 1 hour time frame, the market gets to a minor support level. We get there, we struggle around that area for a bit, and then the market bounces off of that level. I'm like, all right, cool. And then the market attempts that level again. Now, if on a 1 hour time frame, I see that we put it a double top at a level, a double bottom, okay? A double bottom at that level. What I will most likely do is I'll most likely move my stop losses from where they are slightly past break even. Now, what does all of this mean? On lower time frames, if you want to identify market reversals, it has to occur at a level. However, on higher time frames, reversals don't have to occur on any level. If I see a double top on a weekly time frame, best believe my entire bias is changing. Now, when it comes to lower time frames, if I see a double bottom or a double top, whichever the case may be, I will know that the market wants to go for a retracement. This doesn't mean that the entire market is reversing. It simply means that a retracement wants to occur. I'm going to take this again. on lower time frames, when chart patterns occur like double tops and double bottoms, the entire trend isn't changing. It simply means that that market wants to stop falling temporarily and we want to go for a retracement to continue heading back in that direction. However, if I see a chart pattern be double top, double bottom, head and shoulder and inverse head and shoulder, if I see that form on a weekly time frame or a monthly time frame, I don't need it to form at any key level. Once I see that, bam, it simply means that the whole trend is about to change. So guys, this is exactly how you go about deciphering, but I see a lot of people make big trading decisions just because a 1 hour time frame showed you a double bottom. I've seen double bottoms form on 1 hour time frames and the market comes back and crushes that support level that was holding that market previously. You get what I mean? So this is the difference. 1 hour time frames don't really hold that much strength. You get what I mean? Lower time frames don't really hold that much strength. So I usually like to do my analysis on higher time frames and then execute the trades on lower time frames. So all I'm going to be looking at on lower time frames, as for those little, I call them speed breakers, right? They're speed breakers. Doesn't mean that the car is going to stop going in the direction. It just means that the car just wants to slow down, climb the bump and continue going. However, at that time, I will then start locking in profit because the market might want to go for an even bigger retracement that might stop me out in the process. So this is the difference. Lower time frame chart patterns don't change trends. Higher time frame chart patterns change what? The trend. So guys, once again, like I'm saying, I'm sorry I can't break this down into little chunks. The Forex Mastery course will be able to help you do this, and the link is going to be down below. Alright guys, so the last tip I'm going to leave you guys with before I have to run off, I've already been recording for about 17 minutes, is please don't get distracted by the news. I remember starting off in the Forex market. I remember I used to watch the news on Bloomberg. I used to check Forex Factory every now and then. I was so zoomed into the news, and I just used to wait for them to say something serious and then want to trade that. In the Forex market, the news only accounts for just 5% of market movement. I'll tell you what actually happens in the Forex market when it comes to news. There are only two news events that actually really move the market per se, okay? Overall, like if you prorate it based on how many times the news releases have come out and how many times the markets have really moved significantly, you find out that there are only two major news events that actually get the market shaking. That's non-farm payroll and FOMC. Now, when it comes to the news, what I like to do is, because I know that the news is nothing but a distraction, right? I simply just don't trade on non-farm payroll Fridays. What I do is I wait for non-farm payroll figures to come out and then I execute my trade. Technicals will always win in this market. The overall trend will always win. There are several times whereby the market has been, let's say, bearish, and then non-farm payroll figures came out. It was really good. The market spiked back up, and then 3 to 4 days later, I noticed that the market corrected all the way back to its original trend. So what I'm trying to say here, in essence, is don't be shook. The only traders that are really shook by these news releases are traders that are always looking at lower time frames. If you're always looking at lower time frames to make your trading decisions, it's going to shake you. But if you, for instance, like the Forex Mastery students, you have the bird's eye view of the market. You can see exactly where the market is going to, okay? It's just like a farmer that is probably looking at a particular season to harvest his crops or plant his crop, whichever the case may be. And he knows that, I give you guys an example, in the UK, we have we got winter in the UK from October all the way up till March, okay? And then when summer comes around late April all the way back till September, okay? So, these are the fixed seasons. These are the fixed, okay? These are the key levels, And then, let's say sometime in summer, it now snows. You already know that the next day or next 3-4 days, you can't wear a winter jacket to go out because it's going to be the market and the weather is going to go back to status quo because this is the season. Same thing in Nigeria as well. We know raining season is between April to October, so we know that, and then we know dry season starts in around after October. Is it October to April? I can't remember what the seasons are. Anyways, we all know that in December in Nigeria, if it rains in December on one day, we know that, okay, it's rained, but we know subsequent days is going to get dry and very cold, okay, because it's the Hammertime season. So this is the same thing with news releases. It's just a distraction. Focus on the key trend. Focus on the bigger picture. So guys, ladies and gentlemen, I wanted to say a big thank you for staying to the very end. I don't know if I covered up to 5 points, but I've actually written a lot more than this, but I think these ones are actually the best ones. So I'm just going to quickly recap, right? So first one is define market structure before you get into any trade. First thing is you want to define market structure. Second thing, identify the areas of value. Like I said, the Forex Mastery course is going to teach you guys how to do these things properly. Pay attention to reversal signs, especially on higher time frames, but on lower time frames, if they occur on minor support and resistance levels, best believe that market wants to go in for a retracement. And yeah, don't get fooled by the news events. They're nothing but a distraction. Thank you for sticking around till the end of this video, guys. I want to say a big thank you. It's been 21 minutes, a long ass video. Thank you for staying to the very end. Don't forget to drop me a like and subscribe. Once again, the link to the Forex Mastery course is going to be down below. Guys, I'll catch you later. Take it easy and peace out.